Hi, this is Kerry Artek with Wicked Stocks, bringing you the daily Tesla report for Monday, November 27th, 2023. But before I walk you through the charts, as usual, just want to encourage you to please click like if you haven't already, subscribe to the Wicked Stocks YouTube channel, share the content if you would with friends and colleagues, and check out wickedstocks.com, where we offer a full suite of both daily and weekly analytical videos just like this one. Daily analysis in the SPY and the Triple Q, that is the S&P 500 and NASDAQ 100 ETFs. Weekly analysis in the S&P 500 Index, the NASDAQ 100 Index, the Long Bond ETF, the TLT, as well as 2 individual stock picks a week that you never see on YouTube. That is 8 a month that cater to the 3 to 5 week swing trader out to the 3 to 5 month near-term investor. We're always looking for at least 20% moves on those stock picks, and you can check out all of this for no cost for 5 days. We offer a 5-day free trial up front with a wickedstocks.com subscription. So sign up for wickedstocks.com, check it all out. If you don't like what you see within 5 days, you can cancel your subscription at no cost to you whatsoever. On with the chart. Start with the big picture, work our way into the day itself. This is a weekly chart, just a reminder that at one point, about a month and a half ago, having settled below this rising one-year channel bottom at 267.33, we were anticipating the descending channel bottom that is presently in the mid-170s, preceded by a 5/8 downside Fibonacci at 177.25. We are no longer anticipating that lower area following the settlement almost 2 weeks ago above this descending 1/3 speed line that came into existence once the low was put out in late October. We rallied up to it, fell away modestly, moderately, you might say, and then proceeded to close above it. And that set up a buy signal that is actually still in play. We're about 2 weeks into that 3 to 5 week buy signal up into the low to mid 260s. You can see the channel top at 267.33, and it actually is converged this week with a descending channel top at 267.70. It is the descending band of channel resistance that we will be following as our target, and is an area that can absorb buying into possibly through January. We could fall off from here in a meaningful way into later Q1. There would be a significant buy signal into Q2, I would say, with a settlement above 267.70 at the end of any week, but we're a long way from that right now. I'll take you back to this image. Now, in terms of bottom picking 211.81, we're no longer suggesting that, but it does still represent the buy signal that occurred 2 weeks ago and above which this upper region is anticipated as a 3 to 5 week objective. What we are suggesting to bottom pick, if you will, is this band of support, 222.84, rising 2/3 speed line that came into existence following the high a little over a week ago against the low that was in late October, and a descending channel bottom over the last week and a half of activity. They come together today really at 222.84 to 223.85. I'm not expecting to see this area today, unless perhaps we close below, open, break, or open below 230.72. 230.72 is nothing more than the series of lows with the exception of one of them about a week ago where we spiked through it at 230.72. I'll also mention that this high here, this gap, this high part of the gapping process is 230.61, but I'm going with 230.72 as our intraday support, above which 242.93 is in reach today. I'll get to that in a moment. And below which, as I say, breaking or opening below 230.72 does signal 222.84 to 223.85, where we can bottom out for the week, come off of this area nicely, and within 2 to 3 weeks of testing this 222.84 to 23.85 region, we can make our way up into the low to mid 260s as a completed objective. I'll also draw your attention to, on the weekly chart, that we have the high of the low at 226.37. I have that as a minor point today, but I'm drawing your attention to it because this rising 2/3 speed line at 222.84 will be in that vicinity midweek, like Wednesday, Thursday of this week. And I'm just drawing your attention to it because, it is meaningful support in its own right. I've always used the high of the low, especially if it's a meaningful low like this one was. This was almost a key reversal low, new pullback low, closing higher on the week. We even took the previous week's high out, but we did not close above it. So this is a meaningful support level in its own right. You could actually make a case that holding above 226.37 will keep this targeted low to upper 260s in reach over the next 2 to 3 weeks or so. And so there's a lot going on in the 220s, but in terms of a base of support, today it's 222.84 to 223.85, where 2 to 3 week swing traders, 3 to 5 week swing traders can stay long or get long. You may be long already following the settlement a couple of weeks ago, roughly above the 211.81 longer term speed line. But, for right now, I think this is a solid zone of support to buy into for the day, for 3 to 5 days, and for actually 3 to 5 weeks. Now, if we were to close below 222.84, then yes, within a matter of, days, several days perhaps, we test 211.81. But I will say that if we close below the 222.84 speed line, we've got a good high through December. We should rotate south to not only 187.61, this trend line, within probably 2 to 3 weeks, but we're back to then anticipating what was at one time an expectation at the 174.28 descending channel bottom. That would come into play within 3 to 5 weeks of closing below 222.84. I know we're a long way from that right now, but a lot can happen over the next day, 2 or 3. And if we close below 222.84, and if you're long, anticipating the low to upper 260s, I would suggest liquidating that long position and consider going short. And short in that scenario could actually be just merely reaching for 175 out of the money puts that don't expire for at least, I'd go a couple of months out on that expiration. The further you go out, obviously, the pricier the premium, the pricier the options become, but the better their delta holds up, less time decay element. So there's that. Now let's talk upside today, because the path of least resistance remains upward above 222.84. And if we take a look at the daily chart today, there's a lot going on here. This simple trend line coming off the highs at 242.93, I have as a session containment level, because at least for today, because we've got the high settlement price that was put out a week and a half ago at 242.84. And so if we close above 242.93, then I see that as a buy signal through the rest of the week. Now, yes, we still have 246.68, that 50% upside retracement that actually captured the highs about a week and a half ago. So I'm not ignoring it, but I do see a scenario where we push through 242.93, we tag 246.68. It can hold on an intraday basis, possibly through the balance of the day. And following a test of 246.68, we just might fall back below and settle the day below 242.93. But 242.93, if settled above, I'm going to go with that as a buy signal through the rest of the week and into next. In other words, if we close above 242.93, this 2 to 3, 3 to 5 week objective in the low to mid 270s, I think is likely to be realized by the end of next week. On the way up, we do have a simple trend line coming down at 250.15. So for the day, I think this can contain daily buying pressures. But once again, I have an up pivot point at 242.93 that, if settled above, should yield this low to mid 260s by the end of next week. If we close above 242.93, FYI, 246.68 becomes a mere minor point. 250.15, I'm talking tomorrow, becomes an intraday resistance level. They all become reduced in significance if we close above 242.93 because of the it's coinciding presently with the 242.84 high settlement price. In other words, if we close at a new high settlement price following the October low, we're also closing likely above this trend line, which should set off follow-through buying. In other words, 3 to 5 day swing traders go long, or at least you're not short, above 242.93, anticipating, I'm talking to 1 to 2 week swing traders as well. If we close above 242.93, we're expecting this targeted zone of resistance that's been in play now for the last few weeks, once again following the settlement above this 211.81 long-term speed line. I'm trying to think if there's anything else that needs to be said. All the minor points have been carefully chosen as per usual. Buying aggressively the 222, 223 handle, both on a day trade basis, 3 to 5 day swing trade back to 242.93, 3 to 5 week swing trade back up into the low to mid 260s, closing below 222.84. No good reason to be long Tesla, in my opinion. If your time horizon takes you through the rest of the year, we could within 2 to 3 weeks fall into the upper 180s, and I think over the following 3 to 5 weeks, likely to continue south to the 174.28 channel bottom, where we could bottom out through January, quite possibly into later Q1. But we're not there yet. I'm still anticipating upward continuation into the low to mid 260s, so long as we continue holding this 222.84 rising speed line. I'm almost going to hit 10 minutes here. I'm going to leave it at that. Please click like, share, subscribe. Check out wickedstocks.com. Take advantage of that 5-day free trial. I'll be back tomorrow with Tuesday's Tesla, and you have a great day.